Welcome back to ICT Trading Concept. Just write to the comment box that you can hear me. I mean the voice is okay. I would love to talk about yesterday's last hour price action, the big run over here, and then I will talk about a little bit about uh, the thing over here. Okay, so please write it down that you can hear me. Okay. So I think it's Ovi, George, and music, and SD. Okay, let's go. Can you hear me, brother? Think you can hear me. Good. Sounds clear. Okay. Thanks. Thank you, brother. Need to actually. So first, I will talk about yesterday's last hour price action. Then I will go for the today's London session as well. Okay. I will go to 1 minute chart. Hey, Steve, how are you, brother? Thanks, George, for confirming or we confirming that you can hear me. This was the thing actually happened before last hour, and then when price went above there. Okay. I took a shot over there, yeah, and I have uploaded the video to my Twitter. Just let me go to 15 meter one more time. That was the consequent encroachment of the 15-minute chart. Just let me actually do this type of things. I didn't do. The thing is, one of my brother he messaged me to my Twitter, and I thought I should talk about the price action first because it is very important. Okay, so that is the consequent encroachment from the 15-minute chart. I marked this buy side liquidity. If you remember from yesterday, I marked this buy side liquidity over here. That was my buy side liquidity. Okay, so price was over here, and I told you that when it will take the buy side liquidity, I will get the lower run. Before completing my session, I told you don't forget about this sell side liquidity. Guys, you have to remember the things I told, otherwise after it happened you will think what I'm talking about. Okay, so that was the relatively equal loss. I'll just come over this one. So there was the relatively equal loss. I told that don't forget about this equal loss that is gonna be triggered today because this is the expansion. I mean the continuation of the expansion, and I am thinking that when market will take the buy side liquidity, then it will go for the sell side liquidity. Now I told you I don't care about when market is going higher. I don't care about to take that entry because that is going against my the expectation. So when it is going higher, I'm not interested to take buy, but I will be interested if I see anything over there after taking the buy side liquidity. If I see any setup over there, I'll go for the short because I have very clean sell side liquidity over there and over here. Okay, so I have, this is the extreme sell side liquidity, this is the most obvious sell side liquidity. Market went higher. When it was going higher, I was just marking some level. I told you that if this high has been broken, then I will get my market structure shift. This high is, if this is broken, I will get my market structure shift. That means there are more possibility market will go higher. Okay, so I was live and I marked the consequent encroachment of that last week. This is the week and I marked the consequent encroachment. I did it when I was in live. So then I went I just complete my live. I was watching the price. Look how it worked over there. Okay, so price went to that consequent encroachment, failed to take the buy side liquidity. In the meantime, it has made the relatively equal highs. So that is the buy side liquidity price has made for later use. Okay, now I'm interested to take sell to this sell side liquidity, specifically that sell side liquidity. Price went higher one more time, take the buy side liquidity from that, specifically that high, and is that okay? Just a second. Okay, so my internet is slow, so I would love to place this on first, then I will talk about this. Price went above, take this buy side liquidity, came to the constant encroachment, rejected from that constant encroachment, got my market structure shift over there. Now, is it clear market structure shift? No, this is not clean market structure shift. You can say this low and that low. Okay, this low, they are relatively equal lows. Okay, so if you would love to mark this as a market structure shift, I will say this is wrong. Okay, this is not your market structure shift, but I showed it to you yesterday so many times that I really don't need the market structure shift if I know the narrative. And if I see previously it worked perfectly, I don't need the market structure shift. Okay. Now here market structure shift, I am just going to avoid that on. What I was needed to see that if it can break the buy side liquidity. Yeah, it can go little bit above the previous, that means that swing high. Although that was not my buy side liquidity, that high wasn't for the buy side liquidity, that was the swing high. I will think that I got my market structure shift. Okay, if I get that, I mean price would go above that market, I mean that high little bit, then it has to come back again to a fair value gap. Okay, just think like that way. If it could go above that high, little bit above that high, little bit, okay, maybe it came here, then also price has to come back again a fair value gap. So this is the fair value gap, or there is another fair value. No, there is no another fair value gap. Maybe there is a little fair value gap. So it has to come back again to the fair value gap for going higher. So I have a chance to take a sell. Now it failed to go above that swing high. In the meantime, it has made the buy side liquidity. Where did it go? To the consequent encroachment of that week. What is that? That is the consequent encroachment of the fair value gap. Every week is a fair value gap. I see the week as a fair value gap. The consequent encroachment of the week is kind of the consequent encroachment of the fair value gap. Let me mark this. Failed for one tick, I don't care, but it was very near to the consequent encroachment of that fair value gap as well. I wasn't interested to take sell over there. I needed something, what I told you before. What I was needed a fair value gap. Okay, so when price went lower, this is displacement, it went lower, I got only fair value gap over here. This was the only fair value gap. There is no other fair value gap to that leg. Just watch clearly. There is no other fair value gap to that leg. This is the only fair value. Now I put a sell limit over there before closing that candle. That the reason was I was just going to my washroom. That's why I just put the sell limit over there, and when this candle actually went above, I was in the market. But if you don't want to do that, just wait to close that candle, then mark the fair value gap, wait to come back again to this fair value gap, you can take that entry. I targeted over there, maybe I so far I remember I targeted over there. If you just watch the YouTube, the Twitter video, you will get it where I put my target profit. I forgot. Okay, so that was my trade. Or when I will just close the replay mode, you will see the thing. Okay, I think that was my entry over there. But I told you, don't forget about that sell side liquidity. I didn't go for that sell side liquidity. There is also relatively equal lows over there, the sell side liquidity over here, and finally price has taken the sell side liquidity. Okay, it went little bit, okay, over there. So it has taken the sell side liquidity. Now when price was going higher, I was just thinking why price is going higher, because of taking buy side liquidity. When it came to the I was needed a level where price can retrace. So that was the consequent encroachment of that specific level. The week from 15-minute chart, price went lower from that specific level. I got consensus, so I took short with so much confidence that market is going lower. Now I didn't hold my trade until here. If you would love to hold your trade over there, you have to take a partial to that fair value gap. Look at this fair value gap, you have to take a partial over there, you have to take a partial below this lows, and then you can hold it until here. Okay, you can do it. Now I would love to talk about why price went higher. Okay, just let me close this one. Is it going to complicated? Yeah, is this very complicated? I don't think so. Where was that? Here. I'm going to remove this sell side liquidity now. Now Price came below. Where did it came? To the constant encroachment. What do you have more over here? What do you have? I have a 15-minute fair value gap over there. Now, brother, you told us that market will go low. Now, why you are thinking that market is going higher? Look at the time first. What time is it? 3:30. That means the last hour. Okay. Now, last hour, what actually we expect from the last hour? Open, manipulation, distribution, little bit go inside the range, complete. Okay. This is PO3. All of you know about this PO3. I will go to the daily chart now. This is yesterday's candle. Okay. Open, high, went lower, go back again into the range, closed over there. So my narrative was telling me this is the sell side delivery. This today we will get the sell side delivery. Did we get the sell side delivery? Yeah, we get it. Now why market went above? Has to go above. It has to go back into the range for closing. This is PO3. Not every time we get it, but that is why last hour is little bit different. You have to think. I mean the way you think the whole day market price will deliver. Last hour you have to think it will go opposite. Okay, how far it will go I don't know, but you have to be careful about the last entry, last hour entry. What is the last hour? From 3 to 4, 3 p.m. to 4 p.m. So when price came to this fair value gap, I wasn't here, brother, to be honest. I wasn't here. uh Vivek, only indices, bro. Yeah, only indices, brother. Why you didn't mark 130 low as relative equal low sell side liquidity? I'll see that, brother. 130 low. This one, obvious you are talking about this one. Okay. The thing is, I had this clean sell side liquidity, and I was very near to the last hour. Okay. So I wasn't thinking that it will go below that low. I wasn't thinking like that way because this is the last hour, and last hour price actually go reverse. It doesn't need to go below that lows or something like that. See from here, okay, from here it will go reverse, but as this was more obvious sell side liquidity, it will take that sell side liquidity, then it will go higher or it will reverse. Okay, but I didn't expect this big run. Okay, I didn't expect that. I didn't want to see that type of big run, but it is what it is. It has to come back again the runs, so it came. Where price will close, we don't predict that. We just need to see which way price will deliver. That is the reason I didn't mark that sell side liquidity for yesterday. Okay, now when I will see today market will start to go lower, maybe I didn't see the price action for from today. If I see it is going lower, then I will mark them. But yesterday it was very near to the last hour, so that was the most obvious sell side liquidity. I went with that most obvious sell side liquidity. I didn't go for that extreme sell side liquidity. Now price came actually below. This is the 15-minute fair value gap from the 15-minute chart. Okay, and there's another thing I have over here. Very little fair value gap from 1-minute chart. Very little fair value gap. Now you can ask me why this fair value gap is important, brother. That is not the last fair value gap. Okay, let's see. This is the run. After that I got a consolidation, run, consolidation, run, then retracement. This is retracement. This is not consolidation. This is consolidation. This is consolidation. Very small consolidation. Very small consolidation. Am I going to take my buy over there? No. That is my last fair value gap. I will see if price can hold over there or not. If I see it failed to hold it, then I will mark the last fair value gap from here. This is my last fair value gap. Then I will go over there when price will be here to this last fair value gap over there. Just a second. If you don't understand, you have to ask me the question. Okay, if I saw that market actually failed to hold here, instead of that it come here, then I will wait to see when price will go above, and it will give me a market structure shift or something for taking a entry. Okay, as I saw market hold here, That's why I didn't mark that last parallel gap. To this swing high, this is my last parallel gap. One high, one gap, two gap. This is my last parallel gap. I don't need to mark this parallel gap there, as price has respected from there. This is from 15-minute parallel gap. Price come back again to the consequent encroachment, retracement, failed to come to this level. But in the meantime, what I have got, did I get any market structure shift over there? Did I get it or not? I need to see that. Okay, let's see. It has taken the sell side liquidity from there, very clean sell side liquidity. I'll mark this as my market structure shift. This is my market structure shift. Why that is my market structure shift, brother? This is not, I mean, uh, this high, why that one is my market structure shift? Do you have any swing high on its left and on its right? On its right, on its right, I have this, I mean, the, what to say, the swing high. One on my left, there is some equal highs, but if you see very cleanly over here, or if you compare with the, what to say, the yeah, what is this, the mini S&P market, you will get this is not actually the equal highs, or how to explain this one. If you would love to mark this high as your market structure shift, you can mark it as, I mean, this very clean market structure shift, but I will go with this because in my opinion there is a swing high over there. I mean, these 3-4 candles actually made it didn't made the equal highs. In the second chart, it has actually made the, what to say, the swing high. Okay, that's why I am going to mark that one as my swing high. But if you would love to go with the precision, you can mark that one as your market structure shift. That swing high is appropriate for shifting market structure. Okay. Now it's up to you. You can go for that, any of that, but any of over there you will get your entry. So actually that I let it go to you. I just put it up onto you. There is, it's up to you. Okay. So I have nothing to talk about here. I really don't know how to explain this type of things. That is kind of the experience. I see this type of things so many times, so I can mark them. But for you, if you would love to go, you can go for that swing high for shifting market structure. I will say this one, I got my market structure shift. This is my parallel gap. This parallel gap is my parallel gap. I will take my entry over there. If I were over there, I would take my entry over there with two confluences, that it went above this new week opening gap, it come back again to the top of that parallel gap. I will got that thing. I will get this parallel gap. Now if you don't want to take that one, then you can go just remove this one. You got your market structure shift over there. Let me actually remove these things as well. You got your market structure shift over there. This is the run. This is your first parallel gap. What is this? This is your breakaway gap. It's up to you, okay, brother. When whatever you would love to take, you can take. This is your another parallel gap, so you have to take your entry to this parallel gap. When it will come actually above to that gap, you have to take your entry and you have to put your stop loss below that parallel gap. Okay, not consequent encroachment because this is very small. Now where should be your target? You can go for that, I mean, this clean buy side liquidity, you can go for that. It's near about 14 handle, but the its risk reward ratio is 1 is to 0.65. I don't care about that one. I told you so many times, I don't care about that one. So I will go for that. Or you can actually mark that high as well. Or if you see any other buy side liquidity over there, I don't see any buy side liquidity. No other buy side liquidity. So that is actually more obvious buy side liquidity. But if you would love to do something else, I mean the standard deviation, you can use the standard deviation as well. So this is your standard, not like that way. I will read your comment, brother. Just let me talk about this because I need to talk about the London session. Okay, so not that one. This is my standard deviation. So I will go for that. But if you would love to go for that, you can go for that as well. For me, this is my standard deviation. This swing high is valid for shifting market structure, so I will go for that. So that is my standard deviation. I can go for 1.5 over here. That is more obvious. This 1.5. If I would love to hold it until 2 minus 2, I can do it as well. But for me, this is perfect. That entry is perfect for me. This is the entry. Okay, so you can take your entry over there depending on the new week opening gap high. how do you how you are going to take that entry where I was telling you here that don't go for buy. Now why I'm telling you here please go for buy? Because this is last hour. I'm expecting market will go reverse. It will go inside the range again. It is not going to give me the narrative run here. It has done already its narrative job over there. This is last hour. So I am expecting when market went above that high, I'm expecting, yeah, this is the time market is going to take that, at least that buy side liquidity. So I'll go for that. Now I would tell you that please put your stop loss over there and maybe just below that candle, and you will get 1 is to 1.69 something. No, I'm not telling you that because I wouldn't do that. I would put my stop loss over there. It would be maybe 1 is to 0.85 if I would take that entry. All I care about the handle. Okay, so this is my thing, my observation. I don't need to tell you that you can go for that. Now I will read your comment. Bro, you up early? I'm at work at 4 a.m. Brother, I'm just going to close this one. I wanted to talk about the last hour price action, why it went higher, why should you think that market will go reverse, why you are applicable to, I mean, you are approved to take the buy entry at the last hour. That's why I came, and I will talk about the London session. I will talk a little bit about the next target, then I will close. Okay, and when price reach into a last fair value gap, then we have two option. It will pass through the fair value gap, it will reverse price, and then will happen. No, when price will come to the last fair value gap, we will have to think three option over here. I talked about this yesterday. I will talk about this one more time. So Ovi, this is for you. You guys are making me, you know, you are making this thing very difficult. You shouldn't ask this. This is for you only. Just think this is the last fair value gap. Okay, so we will expect three things over here. First thing is price came here. First thing is it will be reverse from here. Okay, then it will come back again to the top of the fair value gap. It will go for the clean buy side liquidity. All of these things you need a buy side liquidity. If there is no buy side liquidity, this entry is not valid. Now there is another thing. Price came to the last fair value gap from up. Okay, this time price came from up. It came this last fair value gap, hold the price. Okay, it hold it, then it has taken some kind of liquidity, sell side liquidity, gave you very nice market structure shift. There is your fair value gap. Price came to that fair value gap, you will take your buy, the buy side liquidity 22 YT model, and you will think the last thing over here. It will come through this fair value gap. You will see the rejection from the consequent encroachment, then it come back again to the lower part of this fair value gap, tap to the lower part. If there is a very clean sell side liquidity, that setup is valid. Now if you ask me, is 22 YT model is valid over here, I mean this setup is valid when price will do this type of things? No, this thing is not valid over here. Why this is not valid, brother? Because price came from up. Okay, so it can easily go back again. I need the precision from the fair value gap over here. When it will go through the fair value gap, I am going to use the fair value gap as an inversion fair value gap. If I am going to use that fair value gap as an inversion fair value gap, I can't look for the 22 YT model. If I would love to use that one as an inversion fair value gap. Okay, brother, so this is the three way we will use the last fair value gap. Now if you ask me how do we use this last fair value gap, this fair value gap, okay, we have used this fair value gap with 22 YT model. Market has taken sell side liquidity, market structure shift, this fair value gap, price came to the fair value gap, it went higher, it has taken the buy side liquidity. That was a very clean buy side liquidity. So we have used the last fair value gap from 15-minute chart. This is the fake breakout, I believe, though I actually don't care about, I mean I'm not 100% sure about the fake breakout, or I don't know actually how to mark the real fake breakout. But if I see 2-3 times this type of things, if I would say one more time price went below the fair value gap, then I would think okay, maybe this is not fake breakout. But if I see one time and then I get very clean market structure shift or something like that, I think that this is the fake breakout. Okay. No problem, Obi. You guys will ask me the question and then you will learn. Okay, so that is the thing. And when I saw the rejection from this 1 minute chart, I mean the from here, the rejection from the last fair value gap from 1 minute chart, that was actually made my confidence. It made me more confident that market is actually made going higher. It went above the consequent adjustment, and also it went above the new week opening gap at the last hour. Look at the time. What time is it now? 15:37. But trust me, brother, this entry is the highest gamble, because last hour, last moment trade, we see sometimes so much volatility. You have no idea how much volatility we can expect at the last hour. Just watch price every day. From last hour means from 3:45 to 4 until 4 p.m., and see the volatility every single day. Okay, you will get the precision from that. So anybody has any question about the last hour trading from yesterday? If you don't have any question, then I will go for the London session today, because I told you that, sorry, I told you that I will talk about the London and the next target. Okay, if anybody has any question, let me know. If you don't have, then write it down as well. Okay, but don't just stay quiet. I want to see your name. That's the thing. Okay, I want to remember your name by seeing your name again and again. I want to remember it. So please write, tell me your name. Let me see your name. No question. Thanks, Obi, for asking me no, no more question. I am, bro. Why Dow has moved up while NQ is negative? And the thing is, Dow I don't trade. Dow is kind of the barometer like the dollar index. So I really don't use Dow. But let me actually. I forget the name is also okay. Dow, Dow. CME. What is it called actually? I forgot the symbol. The JMDM. I forgot the symbol, brother. What is the symbol of the Dow? Because I don't look for Dow. YM. Yep. YM. It should be YMZ2023. YM, right? Wow, that is a very nice price action. It is going higher. It has taken the buy side. It is going to take that buy side liquidity over there. So we got the big run from yesterday. And let me actually check the thing over there. I have no idea, brother, why Dow is going higher, because I don't look for these Dow things or this kind of barometer. But I stopped to use Dow to, I mean, to add with my analysis. Okay, I go only for NQ and ES because that is easier for me. Dow actually, the barometer ICT use sometimes. For me, it's very complicated. For me, okay, I'm not telling that it is not going to use or something. We don't trade Dow. We don't. I don't put it to my analysis, so I have no idea why it is going higher. I need to spend more time to figure that out. Okay, so I will do that later when I will alone. Okay, and Julian, you told that there is a fair value gap at 328. Let me see. Just a second. I will see it, and then 320. There is a fair value gap at 328. Why is 328? So there is 328. If you are talking about this fair value gap, I think you are talking about this fair value gap, brother. Why you are talking about that fair value gap, Julian? Why it is important actually? Because it is below the sell side liquidity. This is my sell side liquidity. Even this is at the level of the sell side liquidity. So I won't count that as my fair value gap. I even don't look at that because this is at the level of my sell side liquidity. Look, see, this is at the level of my sell side liquidity, and that is very small fair value gap as well. So I don't count it as my fair value gap, or I don't give priority to that fair value gap because that is at the level of my sell side liquidity. Okay, brother. I hope your doubts will be clear. Okay, so now I would love to talk about today's London session. I want to I love to talk about that. Uh, so London session actually start from 2. So this is 2. I marked this one as my sell side liquidity. Okay, you can see there is a very small run below that sell side liquidity. So that is the shallow run. So I am going to put it over there, one tick below the relatively equal loss. So this is my sell side liquidity for later users. Okay. Now, when we expect market will go lower to the New York AM session, we love to see the higher run at the London session. Okay, what did I mean by that? When market, I am seeing that market is going higher, it is going higher at the London session. I am getting confidence. Okay, maybe at the AM session we will get the lower run. So it works every time. No, I'm not telling that it works every time, but trust me, brother, if you just keep it in your mind, you will get benefited, to be honest, brother. Okay, now I would love to talk about this thing. What do you think? What is this? Is your daily bias? Yeah, my daily bias is still bearish, but I would love to see when it will go higher in a certain level. In my opinion, this is the fair value gap. It is actually trading. This is the fair value gap, or I have another fair value gap over here. This is my last fair value gap from 15-minute chart. If this fair value gap is broken, then I will go for that clean buy side liquidity. If this one is broken, then I will go for that buy side liquidity. If this fair value gap or that fair value gap can hold the price, I will go for that sell side liquidity. Now there I would love to add some logic here first. I have to ask you the question, you have to give me the answer. What is this? You have to write it down, brother, please. So you missed my comment. What did you say? No question, brother. Asking same question again and again. Avi, is ES and NQ SMT always work? But you told when rejection block fail, then we see SMT. And can you please tell when not to use ES and NQ SMT? Avi, SMT is kind of the confluences that will help you to be more confident that this thing is going to work. For SMT, you need so much information. I mean, so much information from beginning to the end. You just can't take your decision depending on the SMT. You see the SMT, you take your sell. You see the SMT, you take your buy. No, not like that way. SMT is very difficult. I mean, not difficult, but tricky. Okay, tricky to understand. So SMT, I need a full session to talk about SMT. Before that, I just can't tell you you can use SMT now, you can't use SMT then. It's tricky, brother. Okay, I'm sorry, but this should be a very small session, and I would really love to complete this one. I didn't take my lunch. I only came here because of my brother, by watching his message to my Twitter. So I thought I should talk about the price action over here. But before coming live, I actually got him, so I talked to him personally. That's why I actually not going. uh, I mean, দরজাটা একটু বন্ধ করে দাও না, দরজাটা খোলা খোলা রেখে দিছো, বিরক্ত লাগছে আমার। সব সময় এরকম করলে হয়? বিরক্তিকর কারণ দরজাটা খুলে রেখে দেওয়া লাগে। Sorry. So this is the bull flag. Okay, guys. I need to actually close this one. It. This is the bull flag, and the retail trader, they will mark this as a bull flag. Now they will do this thing. They will mark from this low and that high. Okay. So this is their range. Now they will mark this on the same way. That is the thing. Now they are going to target over there. They are thinking we got a bull flag, so price will go until there. This is their range. This is how they actually use the bull flag. Now I am not going with them. I'm thinking this is the place where everyone who actually didn't get the confidence to take buy there, when they will see prices going higher, they will take their buy over there. Every single candle they are taking buy, because the bull flag is going to work. This thing is going to work, so they are going to take buy over here. Now I will talk about the ICT things now. What do we see now? We saw prices actually made the relatively equal lows over there. This is the last parallel gap, and we have very clean sell side liquidity over here. This is our sell side liquidity. Very clean sell side liquidity over here. Market is going higher. Where did it go? To this parallel gap. There is an imbalance. When price was going lower, it failed to trade that area. So it is going to that, specifically that parallel gap. Then we will get the run toward the sell side liquidity. When I will go for this sell side liquidity, when this parallel gap, this last parallel gap will be failed to hold the price, I will go for that sell side liquidity. Until then, I'm not going to take sell. I mean, when price will be below this sell side liquidity, then I'm not interested to take sell. I will be interested to take sell after breaking the last parallel gap. I will be interested to take buy when this parallel gap will fail to hold the price. When price will be above that parallel gap, then I will be interested to take buy until this buy side liquidity, that is very clean buy side liquidity. Okay, I will be interested to take buy then, and in this area I am not doing anything. I will go for sell if I see a very clean setup from a specific level. What is the specific level? Either it has to reject from the constant encroachment or the top of this parallel gap, or maybe from this low of this parallel gap or the constant encroachment. I mean, from a specific level, if I see price has been rejected, then give me a very nice market structure shape with a very nice parallel gap, I will go for short. Am I going to hold my trade until here? No, I'm not going to do that. I will look for some other sell side liquidity from 1 minute chart. Maybe this low. This very clean sell side liquidity. Maybe I will go for that sell side liquidity. Maybe I will get some sell side liquidity over there. Look at this. This is also very clean sell side liquidity. See, I will go for that. But what I need now, if I get a setup over here, okay, it has taken the buy side liquidity, very nice market structure shift, a very nice parallel gap. Am I going to take an entry over there? No, I'm not going to do that. Why I'm not going to do that? Because look at the level where price is retracing. Now you can come back and you can tell me Brother, it has traded from 1 minute fair value gap. I don't care about 1 minute fair value gap. I'm going for a big run. I'm going for a big run. So I need a level from higher time frame, not from 1 minute time frame. So from higher time frame, I know this is the level. If I see price has been rejected from that level, maybe it can go a little bit above to that consequent encouragement from 1 minute chart. It can go, but I need to see price first come here. Then it is rejecting, or it came to the upper level of the fair value gap. Then it is rejecting. I need that type of information first. I just can't take my sell over here by seeing the setup over there. So you have to have some level from higher time frame. This is from 15-minute chart. I love 15-minute chart. I love to mark the 15-minute chart fair value gap or as my higher time frame. I believe that if market can reach to a level from 15-minute chart, then I will get my expected price action. Okay. Then I will go for the short. I am not interested take my short over there. Now, if I see price actually went lower, take the sell side liquidity, take this sell side liquidity, maybe it has taken this sell side liquidity. I don't care because I didn't get the perfection from here. It has been rejected from a what to say random level. I don't want to see price will reverse from a random level. Now you can ask me, brother, you didn't mark the quadrant. If you would mark the quadrant, lower quadrant, then you could see that market has been rejected from the lower quadrant. Okay, I mark the quadrant only for the daily chart or the weekly chart. I told it already. I go for the quadrant only for daily chart and the weekly chart. For 15-minute chart, I need only three level: upper level, consequent encroachment, and the lower level. This three level is important for me. The quadrant level, I don't mark them as my for my analysis. Okay, so that is the thing from the London session. I told you that I would love to give you some direction. So that is my last direction. That's this sell side liquidity. I hope that will be triggered today. Above here, I have this buy side liquidity. This chart. So from 15-minute chart, you can see this is the upper, buy side liquidity. This is the sell side liquidity. I have three level, 1, 2, 3. I have three level to take my decision. I will take my decision depending on that three level, and this is how I actually do my analysis to go for my bias. Now, if you ask me about the bias, yeah, I would love to see the lower run. How long it will go? It will take this sell side liquidity. Okay, it doesn't need to go below this low. It doesn't need to go because today is Friday. I will expect price will close inside the the range. Okay, this is the high of the range of this week. This is the low of this week. So price will stay inside this range. Now it will go higher. I don't believe that it is going to take that buy side liquidity. I don't believe that. I don't want to see that. I want to see it will go lower. At least it will take this sell side liquidity from 15-minute chart. Don't forget that this two is from 1 minute chart. This is from 15-minute chart. I would love to see it has taken the sell side liquidity. Then it has reached to this last breakaway gap, and then this week will complete and this month will be complete, and December I will try to come live tomorrow for talking about the last month of the last year price action. So that's all. Okay, it's possible that it's going to test new week opening gap now. Possible. This new week opening gap now? No, it's not possible. I mean, it can be, it can happen. Okay, nothing is impossible to this trading, but I don't want to see that big run right now, because what time is it now? Look at the time first. 4:45. Okay, it's very near to complete the London session. We expect the run at the New York session, at the London session, and at the New York PM session. We expect the run. Rest of the time we would love to see the consolidation or little movement. Okay, now I don't know today we have any news or not. If we have a news, then we have to take our decision depending on that news. It has taken that fast sell side liquidity over here. No, I'm not interested. I'm not interested to take sell yet. Why? Because it has been rejected from a random level. I don't want to see that. I believe it has taken the sell side liquidity. Now it will go higher. It will give you a very nice market structure shift. Then it will go higher. That is my belief. That is the way I think price will work. That was not my target that was actually taking sell side liquidity. That is my thinking. Now, if it started to go lower, am I going to be frustrated because I missed the trade? That was very clean sell side. No, I'm not going to be frustrated because only reason is it didn't work with my expectation. It didn't give me the precise price action. If you don't work with your precision, if you don't work with your expectation, you are gambling. That is very clean, brother. দরজা খোলা থাকলে মশা ঢুকবে Obi, you understand Bengali, right? As we have Fed Chair Powell speak at 11 a.m. and 2 p.m. So for when we should stop trading? We should stop trading right now. If we have the Fed Chair Powell, then we should stop trading right now. I hate Fed Chair Powell. We expect the consolidation before the Fed Chair Powell speak, after the Fed Chair Powell speak. Trust me, brother. It hurts me a lot. This Fed Chair Powell. I can't actually. I don't know how to trade the Fed Chair Powell. Only the Fed Chair Powell I don't know. I never listen ICT talked about anything Fed Chair Powell speak trading. Okay, I didn't hear, and I really don't know how to trade that Powell speak. What all I know about Fed Chair Powell speak, ICT told please avoid the session. Just he told avoid the session. So it is what it is. Okay, guys, I think that's all for today, and you got the precision or my expectation how I am thinking price will work. The last breakaway gap, I am expecting price will come to this breakaway gap today. Okay, it will happen or not, I don't know, but I am expecting price will come here to this uh last fair value gap. Okay, the price will come over here. That is my expectation. And if you want to mark this level to your chart, you can mark it. I mean the buy side liquidity, that is important. Last fair value gap, this fair value gap. Why this fair value gap? Because after taking the buy side liquidity, market structure shift, this is the first fair value gap. So price can come to this fair value gap, or then it can reverse. But if it would love to go to the last fair value gap, I would love to see that. I mean, no problem, I have no problem, but I don't want to say it's broken. The price went above that fair value gap. I don't want to see that from 15-minute chart, specifically from 15-minute chart. I would love to see price will go low, it will take the sell side liquidity, then it will trade, it will come at least to this breakaway gap. That is all the expectation from me, I mean from the chart for today. So today is holiday from trading. Not holiday, we should read the price, we should figure it out how to trade Fed Chair Powell. I will be live, I think I will come live at 8:30. I'll try to come live at 8:30. Okay, so I think okay, that's all for today. And anybody has any question? You need to make test. Yeah, you can do backtest, brother. Backtesting is very good. I was watching the guy. I would love to watch his trade because just a second, if I find him or not, let me see. Just a second, I'm going to leave you very soon. So I was watching his streaming, and he was actually, he took that entry and he was telling something over there, and how he managed his trade. I saw them. Still I'm learning, brother. Okay, so I try to learn from everyone until someone is going to make me, I mean make me wrong. I try to learn from him. So I was watching his entry from there, or how he was talking about over there, why he took that entry. That was good. He took so many losses yesterday. So today's first entry he took actually the winning trade. Then I came to my life. Okay, and that's all for today. You can watch him as well. I mean the perfect ICT model. What is his name? His name is Cami Capital or something. Yeah, he do some kind of live trade. Sometimes I love to watch him. Okay, now if you say me I'm a great fan of him, no, I love to see his entries. when he to do that scalping. I love to see it and I try to figure it out. Is it going to match with my expectation or not? So sometimes it match, sometimes it doesn't match with my expectation. Okay. Just you can enjoy his entries. Okay, that's the thing. So thanks, June. You are most welcome, George. I have to tell you something, George. Are you there? Let's what happened, brother? Thank you for the time, brother. No problem, Obi. I have a lot of objection against you, brother. Don't worry, I will message you. George, are you there? George, George Camarero. Okay, George Camarero, are you there, brother? Yeah. Okay, George, you have a punishment. Okay, brother. You gave music live your composition. I mean, he sent me your composition, music composition, but you didn't think about me. I'm also a great song lover. Okay, I love to listen song. I listen a lot of song. Okay, but you didn't give me your song. You gave it to music live, and I get hurt. To be honest, brother. Stephen, you are here as well. Okay, brother. Thanks. So, George, to be honest, you have a punishment. Okay, I'm going to block you. You didn't give me your song, and within 1 hour, if you don't give me your composition, I am going to block you. To be honest, brother, I am going to block you from every single one. If you don't give me your composition, you can send it to me to my Discord or I mean Twitter or wherever. Okay, I don't know where I can get the file or something. Just give me the song. I would love to listen that. And music actually, music live. He told me that it was awesome. Okay, so I would love to listen it. Okay, thank you guys for being with me, and let's see how it works today. I would love to read the price with you all at the PM session. I mean the AM session, New York AM session. And until then,